Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Really, there's only one sort of story in town, and that's obviously COVID-19 and how it's really impacted not just the sort of health of the global population, but also the economies as well. As many economists and commentators have commented recently, that it's all very well saving people's health, which is obviously very important. But if you're saving their health and there's no jobs in terms of economies to go back to, it really does make it pretty tough out there. Now, at present, most authorities have done a pretty good job of trying to contain the virus and sort of keeping people healthy and safe as possible. But really, we are in unprecedented times here. The US has just gone past 1 million infections in their population, over 50,000 deaths. The UK has over 20,000 deaths. Now, while some of the other European hotspots, sort of Spain and Italy, appear to be sort of on the downward slope in terms of infection rates and also the deaths as well, it's still been pretty horrendous for their population and their economies. Now, at present, there's no vaccine or cure for COVID-19. But certainly, most of the major global drug companies around the world are busy working on the solutions out there. I think it's about 70 or 80 in play at present. And, that's, again, has given the market a little bit of sort of comfort and a little bit of confidence that certainly we will come to a sort of solution at some point in time. There's some pretty encouraging studies coming out of Oxford University, also out of Melbourne, and certainly out of the US as well with Gilead. Now, certainly we've seen pretty historic moves from most authorities on the sort of monetary side in terms of interest rates, but also as well on fiscal packages coming forward as well. Now, in some countries, that equates to sort of billions of dollars, all the way up to the US, which is over a couple of trillion so far. And, there is some talk out there that it could be as much as $4 to $6 trillion. Now, obviously, that all has to be paid for at some point, but at present, it's just a question of getting the economies up and running again. Certainly, obviously, there's a bit of debate in the US about, when that will happen. Obviously, President Trump is very keen to get the economy up and running because obviously you've still got an election there in November. And certainly if the economy is faltering or sort of waning, it's going to be pretty difficult for him to get re-elected. Now, certainly what does appear to be the case, that at present the information we've got available was that sort of panic sell-off on around the sort of March the 23rd appears to be the sort of low, and the market is now sort of forward-looking, priced in a lot of that bad news, and now with the data coming through, it's not quite as bad as sort of first thought. The market is looking to grind a little bit higher. Now, it's obviously being helped with economies gradually coming back on stream. Certainly here in New Zealand, we've come out of total lockdown now. We're down to level 3, and that's put about just over 400,000 people back into the workforce. And hoping with the cases remaining low that in the next couple of weeks the government will then make the decision to move down to level 2, which will then open up a lot more of the economy. In the US, quite a big week this week with many of the big companies reporting their earnings. Amazon came out today, a little bit of a sort of fall in growth, which is probably to be expected, but still results were pretty reasonable. We're given the market is forward looking. They're pretty much written off the first quarter. Second quarter is not going to be great as well. But really, what we're looking for is that sort of forward guidance towards sort of third and fourth quarter of this year to see really whether the economy can sort of get back up and running. And at the moment, the signs appear to be reasonably encouraging. Obviously, oil is still struggling, but then you would really expect that with most of the global economy sort of not quite coming to a complete standstill, but really sort of down sort of 70-80% on capacity, and that's really had a pretty major impact on the demand side. Obviously, a lot of talk out there about KiwiSaver, and really just got to stick to your goals out there. It is a long-term investment. It's not a sprint, it's a marathon. And, really, as long as you can continue to keep making those contributions, keep doing so, because you're buying still the same good quality companies, you're just getting them a little bit cheaper. And certainly in the long run, if you can continue making those contributions, I say, over the next sort of 6 to 9 months, it can make a huge difference come retirement age. So really it is just a question of sort of keeping your discipline out there. Certainly the stocks you hold may well be impacted in the short term, potentially sort of reductions in dividends, possibly even a suspension, but that's not a reason to be selling out. Also as well, obviously quite a few capital raisings out there as well. If you're interested in those, these can represent some pretty good opportunities out there. So if you do have any points to discuss, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.